Hi, and welcome back to the Food Fund, where we analyze investing in food stocks. If you love food and love buying food stocks, beverage stocks, and restaurant stocks, you will love this channel. In this video we will be analyzing if Cava stock is a buy. Cava, stock ticker symbol CAVA, is just one of many companies we explore on this channel. If you are new here, our goal is to help you put your money where your mouth is and invest in the best food companies. We have a lot to cover, so let's go ahead and jump right in. Cue the logo. Let's start with some background info on Cava. Cava was founded in 2010 by three friends who envisioned bringing the warmth and flavors of the Mediterranean to a fast casual setting. Headquartered in Rockville, Maryland, Cava offers a customizable menu featuring salads and bowls with a variety of greens, grains, proteins, and toppings, pittas filled with grilled meats, vegetables, and sauces, and juices, dips, and dressings made with fresh ingredients. In 2018, Cava acquired Zola's Kitchen and solidified their position as the leading Mediterranean restaurant chain in the US. Today, Cava has around 133 locations and employs over 5,000 individuals across their restaurant network to fuel their rapid growth. Now let's look at the price action. Starting with the 1-year chart, we see that Cava had a CAGR of about 25%. Cava went public last summer, so we do not have a 5-year chart to examine yet. These are still early innings for this company, but a comparison with the S&P 500 should provide more color. If we perform a backtest comparison of investing $10,000 in Cava versus the S&P 500, we find some interesting results for Cava. In that comparison with the S&P 500, $10,000 invested in Cava would have grown to $11,429 or a 14% CAGR versus $10,977 or an 8% CAGR if invested in the S&P 500. This demonstrates slight outperformance for Cava. A Cava investment would have been much more volatile with a 86% standard deviation versus 16% for the S&P 500. Cava outperformed the S&P 500 in terms of the best year performance, for which Cava grew 9% versus S&P 500 8%, and outperformed on worst year performance as well, where Cava actually grew 5% versus the S&P 500 2% gain. In terms of max drawdown, Cava fell 46%, nearly 7 times the S&P 500 8% drawdown. While Cava did return more than the S&P 500 over the period, it did underperform the S&P 500 in comparisons using the Sharpe ratio and the Sortino ratio. Let's take a look at the fundamentals. Gross margin is 36%. This is on par with similar quick service restaurants. Revenue has compounded at around 19% over the past 3 years and has reached $682 million most recently. Nice. Steady growth for this newly public company is a good sign. Looking at cash flow, we see a 473% CAGR over the last 3 years for operating cash flow, while capex has worsened at a 68% CAGR. As a result, free cash flow has actually worsened at a 13% CAGR. Despite having great operating cash flow growth, management at Cava has poured more and more money into capex. Free cash flow hit its worst trailing 12 months value in Q4 2022 and has become less and less negative every quarter. Still, operating cash flow needs to grow a lot in 2024 to move towards profitability. Weighted average shares outstanding have grown tremendously over the last 3 years, going from 700,000 shares in 2021 to 32.8 million shares most recently. Cava has been diluting shareholders. Clearly the majority of this dilution occurred with the IPO in Q2 2023. Share dilution is something we will have to watch closely, as newly public companies often lean on secondary share sales to raise money. Now let's view return on invested capital. Return on invested capital has risen from -1% in 2023 to 1% most recently. Here I think the company is just getting started on improving its return on invested capital. Another favorite metric is cash conversion cycle, a measure of operational efficiency regarding supplier and payer leverage as well as inventory control. Going from -7 days in 2022 to -5 days most recently, Cava has gotten slightly less efficient over time. Another trend of newly public companies is worsening cash conversion cycle. While the reason for this is not immediately clear, it seems that the pressure to secure more supply deals and increase capacity leads many young companies to sacrifice efficiency. Now, let's look at Cava's debt. The net debt to EBITDA has risen, going from -13.8 in 2021 to 0 most recently. We can see that this value has fallen recently after spiking in Q3 2023. Because Cava is not profitable, this means that their net debt has been approaching 0 over time. That is great news in this high interest rate environment. The fundamentals of Cava are okay. In any event, should it be added to the portfolio? Before sharing my final thoughts on that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, let's get into my final thoughts. Okay, let's go to the spreadsheet and write out some key values for Cava. It is a restaurant company with a gross margin of 36%. The revenue per share CAGR since 2021 is -86% and the free cash flow per share CAGR is 87%. Here the dilution of the IPO is skewing the results a bit. We will have to wait until Q4 2024 to get a better idea of per share metrics following the IPO. A return on invested capital of 1% is low but is moving in the right direction. Next, the cash conversion cycle of -5 days is actually pretty good. No complaints here. Concerning debt, a net debt to EBITDA of 0 means that with Cava being unprofitable, their net debt is 0 and will likely turn net debt negative in the coming quarters, which would mean that cash outweighs debt. So from a fundamental standpoint, Cava is actually pretty solid. Now let's switch our attention over to valuation. Given that Cava is still unprofitable, its valuation relative to the S&P 500 cannot be calculated. Similarly, the price to earnings growth, or PEG ratio, cannot be calculated. We have followed Cava for some time now and honestly, I am kind of impressed. They are growing revenue and operating cash flow is positive. The first hurdles for any good business. Gross margins are good and they don't have crushing debt. By my estimation, if Cava continues to grow at its current rates, they will be free cash flow positive by the end of 2024. If Cava can bring in between $165 million to $175 million in revenue for Q4 2023, I will be happy. If they can exceed $175 million in revenue, I will be really impressed. A Google Trends review of the top 10 most popular cuisine searches provides some insight into the total addressable market for Cava. Here we can clearly see that Greek food, a proxy for the Mediterranean food sold at Cava, is only the 8th most popular type of cuisine. It is because of data like this that I think aspirations of Cava becoming the next Chipotle are too far-fetched. Mexican food is the second most popular cuisine after Chinese food and is about 12 times more popular than Greek food. While getting customers to switch restaurants within a given cuisine type, say migrating to Chipotle from Taco Bell or on the border, is clearly doable. Getting customers to switch cuisine, say going from Japanese food to Greek food, is much harder and would require a massive cultural shift to take place over decades. Despite these facts, Cava has received a lot of positive attention in the news lately. A Seeking Alpha article praised the company's margins and compared them to Chipotle's margin from the Mexican restaurant's early days. An Investor's Business Daily article called on readers to take advantage of a breakout as seen on technical analysis. Another Investor's Business Daily article encourages investors to invest in companies selling niche products or services and leveraging novelty. From my perspective, Cava has set out to be the dominant player in fast casual Mediterranean food and they are slowly inching towards their goal. While they are no Chipotle, the company is actually doing really well. Success will be theirs to lose. I eagerly look forward to the next few quarters for confirmation of sustained growth and consumer interest. For me, Cava is going on the watch list. Many thanks for watching. What do you think about Cava and their growth? Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now and don't forget to put your money where your mouth is.